And then welcome to an episode of Monday Markets. As always, the show is brought to you by Woo. Links available in the description below. Hope you'll have a wonderful weekend. It's not so wonderful in the world of geopolitics, but we look at candlestick charts here. So here's BTC. There's a failed breakout on the weekly time frame. Failed breakouts are bad. I think this is bearish unless 104k can be reclaimed, or ideally we get a higher high close through this 105-ish area. Same thing, the pre-breakdown structure. Really, what's happened here on the weekly time frame is that in a local sense, we've gone sideways for 4 to 6 weeks, and the market has seemingly chosen to move to the downside with a lower low close, sort of the lowest close within this consolidation. And then if you zoom out, it's not just a local phenomenon, but it's a high time frame range failed breakout phenomenon that I think is more important here, which is that the market traded above 104k and the all-time high, really tried to, lots of public companies buying, lots of news, whatever, and that just wasn't enough, and the market has fallen back inside the range. So whatever time frame this would be on, ordinarily you would just look at the consolidation, which for me is 104k to 94ish, and you would say falling back inside the range, your relevant levels are the range midpoint and the range low, and then you kind of go from there, right? And so in terms of where that leaves us with the current chart, falling back within the range is bearish. We've already bounced from the range midpoint. But any bounces that don't result in a reclaim of 104k are just bounces into resistance until proven otherwise. And as we know, the areas to do business are the extremities, which means 104k resistance and 94k support. That's really it for BTC. I think all other timeframes say the same thing. So I don't think chasing the short side of this is super sexy at the moment, because it's already hit the range midpoint and kind of failed this swing point as well at 100k round number, like all this type of stuff. We've already seen a bit of a bounce and follow through, even on the news. This wick was absorbed decently well. We've seen that play out. I just think at this point, I wouldn't develop any strong views at the range midpoint. It sort of did its job and held up the market, but thematically, more so than the 15-minute green candle or the hourly wick or whatever else, thematically, I think the weekly close below 104k is the most important thing. If you want to be bullish this thing, I think you need for that pattern to either be nullified, which means closing back above 104 and a real test of the all-time highs, or you need a sufficiently deep discount to suggest that the bearish impulse from failing to break out of the range has played out and the thing is discounted right now. And I don't think you tend to get discounts at the range midpoint. I think you're more likely to get them at the range low or lower, whatever that might look like. So that's BTC. ETH is very similar in that on the weekly time frame, it consolidated very tight range here for 5-ish weeks, and it made a lower low close to the downside. So until proven otherwise, the market has chosen direction. That's to the downside, and I think the earliest weekly support would have been 2.3k, but we closed below that, and that's now acting as resistance. So that's no help to us as a level for the time being. So for ETH, in terms of weekly levels, I think the earliest where you could play a bounce reasonably using this time frame at least is below 2k round number 1.9, 1.8k. 1.9k more so. This is the weekly cluster, right? Round number 2k, 1.9k, pray for a wick there. And I think that would still be a rally that you have to treat as a technical bounce into 2.3. But, one level at a time, I suppose, to go back to that comfortable old mantra. Really, the daily time frame shows you the same thing, where this was the consolidation. I tried to convince Don, joking, of course, that this failed breakout was horrific. He actually agreed. And now the market has failed to break out from one side of the range and has closed through the other side of it. So I think the earliest case in which you could be optimistic for ETH, I mean, obviously it's playing the BTC correlation bounce. If you think BTC is bottomed and you want ETH exposure based on ETH BTC, you can play that. But in a vacuum, on its own technical merits, I think the earliest area where you can start playing ETH is above 2.4, and even then your argument is all the way up to potentially 2.7 as a retest of the range high. But other than that, the way this range has evolved is that it hit high time frame resistance here on the weekly, failed breakout side of the range, right? So that's bearish until proven otherwise, and it's just a question of what would prove otherwise. If you're really aggressive, above 2.4 proves otherwise. If you're more conservative, above 2.6 proves otherwise. But as we know, these are counterfactuals. So until such evidence emerges, this thing is bearish, and really 108. 108 lol. 1.8k is the weekly level. Like, you give me a weekly breakdown, I'm going to look at weekly support. I think it's just that straightforward. Same for BTC. If you give me a weekly breakdown, I'm going to look at weekly support, and if it doesn't get there, great. I can change my mind, and I don't mind doing so at a higher price. I'd rather do it at a higher price, because that at least means there's some evidence of strength in the market. Other instruments, I mean, similar, right? Like this is the reason chasing doesn't make a ton of sense. We've seen a few of these trade through pretty significant lows and get picked up a little bit. So the swing low here on Altcoin got spiked through, 80 cent round number, scooped up, a bit of a bounce going on there. Solana, I think, hit the weekly cluster that Don talked about on Friday. Was it this one? Might have been. I think it was this green candle or something of that nature. So that also hit support. So this is what usually happens when you get a high time frame breakdown, is that something like this, right? High time frame breakdown hits low time frame support, bounce. Lol, your high time frame idea was retarded. Bounce ends. High time frame move, lower, resumes. Oops. Fucking scam. Something of that nature, right? At least I've been trapped by this before. This is speaking from personal experience. You know, this is a high time frame breakdown level, and the market kind of closes really badly. What I've done before is kind of sold at the close, and then the market just starts to creep up, right? And I'm like, man, that's a really bad entry. Maybe the high time frame isn't as bad as I think it is. I'm going to close, or I'm going to cover, or whatever, close my short. And then once the sort of mechanical portion of the bounce is done, the high time frame idea takes dominance again. But I got taken out on the bounce portion and didn't get to enjoy the higher time frame follow through. This isn't by any means a roadmap of how it works. It's just something to be aware of to not get shafted completely when looking at lower time frame bounces in the context of a high time frame move. So for me, the high time frame move is below 104k. So anything that happens immediately after, especially if I know it's hitting the range midpoint, especially if I know it's SFPing all these lows, I'm careful not to overinvest in that narrative, because I think the 104k break is more important. If you get lost in the source and you think, oh, well, this is the SFP, this is the bounce, and I think playing it on a mechanical basis is completely fine, but not if it makes you lose sight of the more important thing. I think that's the difficult balancing act of, at the same time, A, acknowledging that the high time frame picture may have shifted, but B, being nimble enough to play the bounce that is caused by that same dislocation. It's like talking through both ends of your mouth. If you don't want to do it, or you find it difficult, then in general, you're better off just giving precedence to the higher time frame bias and saying, yeah, even if it bounces or whatever, I'm not, like, I don't give a shit what happens here unless it goes above 104k. I think that's generally smart for most people who are not trading super actively or frequently. If you're actively, frequently trading in the market, I think you need to be able to do both, which is keep the higher time frame picture in mind, still be open to playing counter trend lower time frame, but use the higher time frame to inform your lower time frame perspective, which would mean, for example, not holding, like, if you manage to snipe the bottom long, you wouldn't hold it all the way through 104k, because you know this is like an area of resistance, so on and so forth. So pick your poison type of thing. That's it. That's all I've got for BTC. Realistically, thematically, my chart is, and you all know I'm a washed up boomer who doesn't do much day-to-day trading anymore. Realistically, this is all I'm going to be looking at this week. 104, 99, 94. That's it. This is the weekly range. We've fallen back inside. I think that's pretty shit. I'd love to be proven wrong. Maybe these BTC corporate strategy treasury companies can start buying. Maybe macro can stop being a piece of shit, and this can just be our SFP flush. That'd be nice, right? Trade through the low, reclaim 104k, weekly send, a proper stab at the all-time highs instead of all this like wick fuckery, and send it. That'd be fantastic. Just give me that evidence, and I'll happily provide you exit liquidity and just mark it by the top, right? But absent that, I'm going to be looking at this thinking, why do we have a weekly time frame failed breakout? Now again, I didn't believe in straight up fractal analysis, like, oh look, weekly failed breakout all-time high and we went to zero, weekly failed breakout all-time high, we're going to go to zero. I don't think that works one-to-one, but I do think it's worth giving these weekly time frame signals the benefit of the doubt. That's all I'm doing here. Like, I know this is a sweet swing low, I know we SFP'd it, I know we traded the range midpoint, and this is like daily support, all that type of stuff. I'm just giving the weekly time frame the benefit of the doubt that maybe, just maybe, the 104k back inside the range isn't going to be a piece of shit signal that ends up getting invalidated. So until that signal gets invalidated, I'm going to be a bit on the defensive side, and I'm not smart, nimble, or handsome enough to play the lower time frame bounces super well. But I think if you're going to, you can get a pretty good baseline of where to do business based off of these lows and off of the weekly range that's outlined here. And the same goes for ETH. That's all. Hope this is helpful. Thank you to Woo for supporting the show. Their links are in the description. Sorry for not making these. Maybe I'll make them. Let me know if they're helpful. I know they're a bit rushed. Next time we can look at the futures side, but I don't think there's a ton of interesting activity going on the open interest and across PERT premiums, etc. I do have an article titled Comprehensive Guide to like Futures Indicators or something in my pinned post. And in that article, I kind of talk about how to use these things synergistically, right? Like what happens if you see this and this and, you know, this, for example, right? Like a ton of open interest coming in, premiums picking up, but prices, you know, flatlining in an area of resistance. That's one signal. And you can get like open interest increasing, but then you have a bit of a, you know, spot premium, so to speak, or perps trading at a discount and price continuing to squeeze up through a swing high. That's an acceleration setup. Like all these different combinations and permutations. If you want to hear about them on a show, let me know. We can chat about them. But there is an article in my pinned tweet as well that'll do a better job than I can just rambling here. That's all from me. Have a fantastic start to your week, and we'll see you on Casual Friday. Bye-bye.